Tuesday morning. Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson, on a beautiful Tuesday morning. Hope everybody had a great trading day yesterday. For those of you new to the channel, do me a favor, make sure you click that little subscribe button down below so that you get the updates as they become available. Here on the Daily Market Commentary, what we do each and every day is we look at the same 10 to 12 futures markets, identifying potential breakout trades and turnaround trades in areas of fair price imbalance. We leave the lines on the charts to keep us all accountable. So let's go ahead and dive right in. So yesterday on the ES, I had spoken about that there wasn't a whole lot that seemed like it was happening. We had gapped up, and yesterday, for the most part, we just basically traded along sideways. We got a little bit of a run in the early morning, but then that came right back down, chopped around again, and now we're trading up. We're up about 5 points this morning. So, you know, for those of you that don't trade using the overnight hours, we're going to have a little bit of a gap higher. And we are setting up for potential gap and go if we can get above these highs. So this could be a breakout day above these highs. I'm not in love with the breakout trade. I will tell you, it's not. I'm not going to put the line on the chart because I'm not in love with it. I'd like to see, frankly, I'd like to see us base here a little bit before the breakout, or pull back from it and then base and then have a breakout. So while I think it sets up for a good breakout trade, I'm not looking for that today in this particular market. I'd rather wait for the perfect setup for me than try to force something. And right now, that's just not there. To me, there's no sense in forcing it. I will maybe look on, say, the 15-minute time period throughout the day and see if we come back and retest one of these areas with any degree of strength. You know, this one here was right around the London Open, and I do like areas that were created around the London Open. So you could get a little bit of a pullback into this region for a reversal, but once again, it's still even on a 15-minute time period. So this is what I call tough sledding, right? Typically after periods of tough sledding is when you get your good reversals. So I think that we're in one of those periods of tough sledding. If you look at it, you know, from basically for a whole week, we've been in about this 30-point range, and 30 points is big for day trading if you're looking in and out of these tiny moves, but I like it when I can catch 20 points in a day, right? It doesn't happen all the time, but I want to be patient enough to wait for the setup for that trade. I may not get it. I may only get 2 or 3 or 4 points, but I want the setup for those big reversals, big profit margins, and right now it's just not presenting itself, so I'm not going to try to force it. Looking at the Nasdaq, so here in the NQ, we do still have a potential reversal trade down here if we do break out. Now the NQ, if you look at the NQ relative to the S&P, it's slightly underperforming over the last couple of days. So if you look, the S&P is just about back to its high, whereas the Nasdaq is still fairly off of that little high that we had there. So now looking at it on a little bit of a 90-day time period, we are almost back to this little triangle breakout pattern that we had. We've retested it once, so I'll be interested to see what happens when we get, if or when we get back above this 7,000 in the Nasdaq. You know, are we able to bust through this area to then get a bit higher, which would be our back to our all-time high. So the Nasdaq is showing some strength overall, but if you just look over the last couple of days, right, here's the NQ over the last few days. Just look at the angle of the line there. And here's the S&P over the last few days. So we're seeing a stronger market in the S&P right now than we are in the Nasdaq. So if you do believe that we are going to, you know, come back down a little bit, the Nasdaq might be a better shorting opportunity than the S&P at this point. Crude oil. So crude oil, we popped up again yesterday out of this little area to the 72, 78 region. I'm going to put a little buy order, a little buy opportunity right in here, because I think if we do get a pullback into this region, this becomes a good potential reversal point. Looking at gold, in gold, I thought we might have a little reversal back in this region here. Turns out we came into it, chop, 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 hit it, came back down, and unable to get any reversal out of there. Speaking to a friend of mine yesterday, he actually just said that gold held the monthly area. So he said he was looking at the monthly area to get long. And if you look at this trend. We do have, you know, the upward trend that has definitely held. We did pull back. All these selling wicks up here have dropped us back into what could be kind of a wholesale line on that bigger picture. I will say that for those of you that are more the investor mindset, gold can be a pretty decent hedge against any unknowns you have in the S&P. And I still like a breakout long above this area here in gold on the monthly time period, which is obviously a much bigger picture, and we don't look at that all that often, but it's just that's hit so many times that's still a very valid area. On the hourly, though, when we're looking at the individual trades, we did, we were unable to hit that reverse, and that was the right trade, right? Because the trend was down. So we were looking at the trend being down, and that was why we had set that short up. You know, our belief in trading with the general trend, the general direction. We've now put in a higher swing high and a higher swing low. So that changes our overall trend direction. So now if somebody wanted to, if you're not long and you want to try to get long, you may have a breakout potential. Now I've got to get above here. Now, why am I putting that line way up there? Well, because right here, there's a little area there, which is a little bit harder to see, but I'm going to wrap my lines around it. And this is what's called I use the term a wick over wick area, where there's two overlapping wicks. Very small, but there's two very small overlapping wicks in a pretty tight range, surrounded by big bodies. So two wicks, tight range, big bodies, to me is a pause in the action. It's a balance area. And if I zoom in some more, now we're in the 15-minute time period, you see that one little candlestick in there. So we could still get a bit of a reversal off of that. We hit it once and came down from it pretty strong. We've hit it again. So we could still get a reversal off of that, but that's why I said that if you want to take a breakout long, it's got to be above that area. Looking next at bonds. So in our bond market, we had the breakdown short, took profits. We've now come back to this line. I'm going to leave this line on here. Maybe not necessarily for a breakout trade, but I'm going to leave it on here because it is still a very valid area and something that we see price kind of hovering around. And it may not be another breakout, but it also may be. So I'm not looking at anything on here specifically yet, but I do want to look at some reversals kind of inside this move. You might want to look at this area here. This is a potential zone of reversal. Now, the thing I don't like about it is when it was created, right? This is kind of an overnight session that was created here. So on this, we would change to a dashed line simply because of the time of the day that it was created, thus giving it a slightly lower degree of probability. Next, the Aussie. So yesterday on the Aussie, we talked about a breakout above this triangle. We definitely have gotten said breakout. Not quite reached profit target yet, but if you're in here, you may want to take your stop and move it up underneath this little fair price value area. I think that this is a pretty good spot to move your stop up to lock in some profits. So that's a pretty good little level there for those of you that were able to take that breakout in the Aussie. The euro, we've still got two levels around us. Both of them are very valid. We've got the 15-minute level down below and the 60-minute level up above. Canadian dollar. So looking at the Canadian, I haven't really put much on the Canadian lately simply because it's been chop city. As we've chopped between these two regions, we've had some big moves up and down, but I don't want to put something in where I'm not overly comfortable with it yet, and there's really nothing in here that's making me want to jump into it. There's no strong reversals. There's no perfect setups for breakouts. Like taking a look at Great British Pound, Japanese Yen. So on our Japanese Yen trade, yesterday we had talked about how we had a pretty good move out of this region. Price came down, came below our fair price value area to hit the profit target. Hopefully you've moved your stop at the very least to a point where you've locked in some profits. So that area is no longer valid. We did put in a higher swing low right here. No higher swing highs as of yet. So since we have no higher swing highs and no higher and higher swing lows in combination, then we are not quite yet looking at anywhere near an upward trend to be a buyer. So I still need to be considered more of a seller. And in being considered more of a seller, you know, this region that was up here, still valid, but I like this area up here a bit more. If indeed we do get there. Now, if we get there, our trend will have changed direction on the 1 hour chart. If we do get there, our 1 hour chart will have changed direction, but our 4 hour may not have. So that's why that is still listed in there. Once again, I talked about this, I think it was last week when I had Charlie on the show with me. When prices do have plenty of room to fall, and when you've got all these areas of selling opportunities above you, but no areas of buying opportunity below you, that should give you an idea that maybe buying isn't the greatest idea until we get to a big picture buying opportunity, right? It's finding where are we on the big picture before taking a trade. Looking at nat gas and copper. Nat gas doesn't have anything that I want to write home about. Neither does copper, but neither one of them have anything that is singing to me at the moment. We are back up to this region here in the copper where we had reversed in the past. We're back up to there right now and getting mediocre arrival into there. Not a strong arrival as we're basing before the arrival, which makes it that much weaker. And then in the British pound, we had the short off of this area here. That worked out pretty well. For those of you that had that position, I'm going to remove this line. This one's no longer going to be valid for me since we moved off of it. And I'm now going to have to just patiently wait on the next setup as there is nothing in here for a setup. So thanks, everybody. Hope you had a great trading day yesterday. If there's something that I can do for you, do me a favor. Shoot me an email, chuck@iiefinancial.com. And until tomorrow, keep it